it over.
I certainly appreciate it. Thank you very much. And good afternoon, everyone. I'm Charles Payne. This is Making Money. You know, I got to tell you, when I hear that China plays the long game as the reason why we cannot win a trade war, well, listen, this has been going on for years, and we finally are just pushing back. It's been a trade war. We're finally fighting back. But when I hear that, I don't know whether to scream, cry, or even laugh. The real problem is American short-termism. Everything is instant, right? The push of a button and, we get everything. And it just means but think about this, because the more we push buttons, whether it's to have something delivered or whatever, make life easier, I think a little bit of long-term prosperity fades, health fades, life expectancy fades, our greatness has been fading. And when that button doesn't work, there's sheer panic. The Lord of the status quo, let me tell you, they understand how to work this, how to manipulate it, and they have pounded a message into the public centered on this near-term panic. In addition to this being perhaps the most publicized stock market drawdown I can remember, the next chapter of the fear campaign is imminent recession. And let me tell you, it's got folks really, really spooked. If you look here, people Googling global financial crisis, look at those spikes. I mean, this is nuts. People Googling the Great Recession. All right, so here's the facts. Recessions, they're always right around the corner, right? Every 4 or 5 years, we're going to have a recession. But in the past century, they've generally been shallow. I use this in the town hall, and I love this. This is your recessions, 35 recessions since 1854. Look how thick they were, how repeatedly they came about in the late 1800s, early 1900s. By the way, as America was superseding Great Britain to become the greatest nation in the world, and look how far apart they are. Now, the thinness of the lines is the time period, so they've been far apart and thin. But they come. So what? We come out of them. We still have been the preeminent nation in the world, and we're looking to make up for lost ground. But now we're told that if we enter into one of these things, it's a black hole from which there's no escape. So let's talk about real economic black holes from which we have not been able to escape. Bleeding great jobs to China. This morning, the focus for me is on the textile industry this afternoon. So when the media interacts with industry workers, right, we've seen all these reports from the reporters. They go local, talk about the eye of the battle, right? And we see these workers talking about being afraid they're going to lose their jobs. We feel sympathy for them. But without any further context, these reports actually help China. They're not helping our cause. This is what we need to be asking folks. We need to go back and interview in the textile industry, which once had 400,000 workers in the last 25 years, 400,000 to almost 50,000. Let's go back and ask these workers, why did you lose your job? These workers, those hundreds of thousands of workers that lost their jobs because it wasn't because of tariffs. The fact of the matter is, even those people we feel that we don't want to lose their jobs, at the end of this chart, they will. They will lose it to the status quo, not to tariffs. And this brings me to the stock of the day, Leggett & Platt. Leggett & Platt shares popped this morning. The number one percentage gainer in the entire market of 22%. Here's the rub. Look at this chart. Look at that little, this was a $50 chart, a stock. So it's up big today, percentage-wise, but it's less than $9 a share. Comments from the company CEO, though, I think were very encouraging, right? He had a great slideshow presentation also. He mentioned overall that tariffs overall may be a net positive for our business. And this is critical, folks, because I want to bring in now some of the slides that he used as he talked about the impact of tariffs. First, the impact. The positive stuffs in the industries, springs, textiles, flooring. On the negative side, home furnishing and automotive. Here again, rod and wire, work furniture, aerospace, specialty foam. He sees these as positive areas with respect to the tariffs impact. But the question is, what are we going to do about it so that we can really make it a plus? They also had a chart here, or a table on mitigating the strategy. In other words, what we'll do to sort of go with the flow here. And the most important thing is at the top, sourcing products domestically or from alternative lower cost countries. We have to start getting this stuff done domestically, folks. I know it's really tough. I know that we have given away so much for so long, but I think it could still happen. I think it could actually be like that final scene in the movie Seabiscuit.
There it is. Have a nice ride, Johnny. Come on, Pops.
All right, folks, let's bring in now Bianco Research President Jim Bianco. All right, Jim, am I just being naive here? Am I just being sort of naive that we can somehow still find a way to bring jobs back to America?
Oh, no, I don't think you're being naive at all. And I think that that is something that we have to do. And I think that when you showed that chart of textile workers losing their jobs, we always hear that globalization is a net positive. And at the top line, it is a net positive. But some people, like those textile workers, have paid a price for the globalization. And we have to start to consider why it is they are. Now, is tariffs necessarily an answer, or is it free trade is an answer and more competitive balance to let them compete on the world market? But at the end of the day, if that's what we're after, and it seems like we are, then no, I think that there can be a silver lining in what we're trying to do here.
I want to ask you about an earnings season. So far, companies are doing pretty good. Most of them are sort of downplaying tariffs or saying there'll be a minimal impact. Are you surprised that more of them aren't necessarily screaming about it?
I think it's because they don't know. A lot of them, United started with the two-tiered
yeah.
on the one hand, on the other hand, earnings, outlook. But I do think that if you look at the second quarter, what Wall Street is doing in the second quarter is they're massively downgrading the earnings estimates for companies for Q2 because they're afraid about the tariffs. Now, this could set up a great opportunity that Wall Street is getting it wrong. And believe me, Charles, they get it wrong a lot. And maybe they're not getting it wrong. But right now, they are getting very pessimistic about the second quarter.
I do also, it's interesting, some of the industries, the niches that have done well, like Boeing is doing pretty good, Leggett & Platt today. These are industries that you would think would be the last to do well in this scenario. I want to mention a post that you put on X where you noted this Fox poll where, for the most part, the folks said that these tariffs will hurt the economy, because you made the observation that when Main Street thinks about it, they think inflation. Wall Street thinks, a slower economy, and right now that the Fed is leaning with Main Street. You think that's still the case?
Yeah, I do. And, just to emphasize what you were saying, when Wall Street talks about tariffs, they scream and moan about the stock market being down because it's going to hurt growth. When Main Street hears tariffs, they fear higher prices at the store, which is why we've seen people run to buy cars and buy iPhones before the tariffs come. I think the Fed, looking between these two, is more worried about inflation because that's really what their job is. And that's what their reputation really hinges on. And that's what they did in 2022. Remember, in 2022, we had negative GDP reports, but the Fed was still hiking rates because they were more worried about inflation than they were about, slowing growth. And I think that that's going to be the case now. So all things being equal, if tariffs mean higher prices because of those taxes and Wall Street's worried about tariffs, the Fed's going to come down on that side, and they're going to be very slow to cut rates. And if it gets bad enough, we might even be talking about raising rates later this year.
So here's the interesting thing, because I feel in the last 2 weeks, the narrative has shifted to recession, at least on Wall Street, Mike. So a probability of recession using asset classes. So the S&P 500, there's 49%, but, depending on what you use, base metals, the Russell 2000, 69%, it can't get out of its own way. But there are other market indicators as well. What I thought was interesting with this one is that your average is just 23%. So where are you with respect to recession?
So I'm still somewhere around 50-50. And I will tell you that in 90 days, I'll either be at 90% or 15%. I am worried that this type of event that we've had, it could be a shock to the economy. And we're going to find out in the next 30 or 60 days, 90 at the most, whether or not the economy has been shocked into retrenching and have a recession or not. So I'm temporarily there, and I'm going to go one way or the other, like I said, in a month or two. And that's kind of what you think you see with these markets, is that they're worried that there's a shock, but I suspect it's going to be a far different story in a month or two.
How do we invest for those 2 months?
Well, you're going to see a lot of so now we're short term. We're going to see a lot of volatility in the markets is what we're going to see, because we're trying to figure out where it's going to go. Now, if you're a long-term investor, you may want to try and look past this. But I think over the short term, the thrill ride is not over with. And we're going to have to figure out whether or not there's been any kind of a damage done to the economy or shock done to the economy because of the nature of these tariffs and the way that everybody's been scared.
Jim, always as usual, man. Thanks so much, Jim. Appreciate it.
Thank you.
All right, folks, let's bring in Solus Alternative